Morning, Steve Free in Chicago with the morning grain comments. This is the last day of January, and we'll see what February brings us with all these unknown issues that might be affecting prices or might not. Again, we're watching pretty closely the Russia and Ukraine tension. The UN meeting might have some significance that they may delay invasion of Ukraine. We also have the Chinese Olympics, which some people suggest that they won't invade until after they are over. We're also watching Fed policy and see in March if the Fed starts tapering and also if they start increasing interest rates. Some people think it's 0.25%. Other people think it's 0.5%. Goldman Sachs thinks they'll increase rates this year 5 times. The other thing that we'll be watching is weather. South America, you've got a week of warm, dry conditions across Argentina, Paraguay, and southern Brazil. Late in the second week forecast, they actually bring the ridge down a little bit for some shower activity, but that ridge could be back in the maps as soon as later today or tomorrow. Here in the United States, there is some dusting of snow across the southern plains. Some of the areas of south central Kansas, north central Oklahoma could get as much as 3/4 of an inch of moisture in either freezing rain or snow accumulation. The rest of the southern plains might get 3/10 of moisture. It's cold. It'll warm up a little bit, then it'll get cold again. So that might be causing some issues as far as logistics is concerned and grain movement. We also know we still have a job shortage across most of the industries. And in the grains, it might be like truck drivers or operations people or even railroad people. And so that might also be slowing things down. On Friday, we had analysts raise their increase of U.S. soybean crush, but left their export numbers similar to what the USDA has, but have a carryout now of 310 versus the government's 350. I think the export numbers could be higher if buyers come in because of the lower South American crop. And I think that the fact that we're near $15 in the March suggests we might test $16. The fact that we're higher in soybean oil and demand for soybean oil is going up and palm oil prices are a premium suggests that soybean oil might go to the 80-cent area. Crude oil is up this morning, and it could go to $100 a barrel. In the corn market, most people are raising demand as much as 350 million bushels, which eventually brings the carry down to 1,200. And then we need acres to make sure that we satisfy next year's demand. The export market is going to be watching pretty closely if we see any increased export demand due to lower South America crops. Wheat market's trying to bounce back with some premium on the Russian and Ukraine situation. We'd also could be trading a little bit the drier southern plains and what that might do to the next year's crop. There's also some pent-up demand for buyers who need to buy wheat but really don't like these higher prices. So again, prices are higher overnight, led by the beans, and we'll see how the money flow goes into February. As always, these are my thoughts, not those of ADM Investor Services. And remember, always treat people like you yourself would like to be treated.